In the heart of America's economy, a quiet revolution is underway. It's not happening in the towering skyscrapers of Wall Street, but on the screens of laptops and bustling coffee shops, on the tablets of artisans in their workshops, and on the smartphones of entrepreneurs building their dreams from the ground up. Small business finance is changing faster than ever, and fintech platforms are leading the charge. This transformation isn't just about new technology. It's about rewriting the rules of who gets to succeed, who gets access to capital, and how quickly a great idea can become a thriving business. Today, we're diving deep into how financial technology, or fintech, is empowering the next generation of American small businesses. For decades, the path to financing a small business was a well-worn, often frustrating one. It meant trips to the bank, mountains of paperwork, and long, anxious waits for a loan decision. Traditional banking systems, with their rigid credit scoring models and slow approval processes, often overlooked the potential of new, innovative, or non-traditional businesses. A talented chef wanting to start a food truck, a freelance graphic designer needing to upgrade their equipment, or a minority-owned startup with a groundbreaking idea often found the doors to capital closed. The system favored established businesses with long credit histories and substantial collateral, leaving many aspiring entrepreneurs on the sidelines. The process was impersonal, slow, and fundamentally misaligned with the fast-paced, dynamic nature of modern small business. But the digital age brought with it a new promise, a new way of thinking about money, risk, and opportunity. Enter the fintech revolution. Companies like Square, Stripe, PayPal, and QuickBooks Capital emerged, not as traditional banks, but as technology companies focused on solving financial problems. They looked at the pain points of small business owners and asked, how can we make this faster, easier, and more accessible? Their answer was to build platforms from the ground up, using the power of data, automation, and digital connectivity. Suddenly, what once took weeks could be done in minutes. Instead of piles of paper, there were clean, intuitive digital dashboards. Instead of a loan officer's subjective judgment, there were sophisticated algorithms that could see the true health and potential of a business in real time. Let's look at access to capital. This is the lifeblood of any small business, and it's where fintech has made one of its most significant impacts. Platforms like Square Capital or Cabbage, now part of American Express, don't just look at a traditional credit score. They analyze a business's daily sales data, cash flow, and transaction history directly from their payment processing systems. This data-driven approach provides a much more accurate and current picture of a business's health. For a coffee shop owner, this means their busy morning rush and consistent daily sales can directly translate into eligibility for a loan, often offered proactively right within their payment app. The application process is simplified to a few clicks, with funds often appearing in their bank account the very next business day. This is a world away from the weeks-long, document-heavy process of a traditional bank loan. This speed and convenience aren't just a luxury. For a business facing an unexpected equipment failure or a sudden growth opportunity, it's a lifeline. Then there's the world of payments. Before fintech, accepting credit cards was a complicated and expensive proposition for many small businesses, involving clunky terminals and confusing fee structures. Today, a simple, elegant card reader from Square or a seamless online checkout integration from Stripe allows any business, from a farmer's market vendor to an e-commerce startup, to accept payments from anyone, anywhere. But it goes beyond just swiping a card. These platforms have evolved into complete business management ecosystems. They offer tools for invoicing, inventory management, customer relationship management, and payroll, all integrated into one central hub. This consolidation saves business owners their most valuable asset, time. Instead of juggling multiple software subscriptions and manually reconciling data, they can see a complete overview of their business from a single dashboard on their phone or tablet, allowing them to make smarter decisions on the fly. Automated accounting is another game. Platforms like QuickBooks Online, Xero, and FreshBooks connect directly to a business's bank accounts and credit cards, automatically categorizing transactions and generating financial reports. What used to be a dreaded monthly task of sorting through receipts and spreadsheets can now be largely automated. This not only reduces the risk of human error, but also provides business owners with a constant, real-time understanding of their financial position. They can track profitability, manage cash flow, and prepare for tax season with unprecedented ease and accuracy. This level of financial clarity was once reserved for larger corporations with dedicated accounting departments. Fintech has democratized it for the masses. Perhaps the most profound impact of fintech is its role in promoting financial inclusion. The data-driven models used by fintech lenders are often more equitable than traditional methods. They can look past a thin personal credit file or a lack of generational wealth and see the strength of a business idea and its execution. This has opened doors for entrepreneurs who have been historically underserved by the traditional banking system, including women, minorities, and immigrants. A study by the Federal Reserve found that fintech lenders approve a higher percentage of minority-owned small businesses compared to traditional banks. By focusing on the actual performance of the business rather than historical biases, fintech is leveling the playing field and unlocking a wave of economic potential that was previously untapped. It's about funding the best ideas, regardless of who has them. However, this rapid digital transformation is not without its challenges. With great innovation comes great responsibility, and the fintech industry is grappling with new and complex risks. The first and most obvious is cybersecurity. Fintech platforms are built on data. They hold sensitive financial information for millions of businesses and their customers. This makes them a prime target for a single data breach could be catastrophic, leading to financial loss, reputational damage, and a breakdown of trust. As these platforms become more integrated into the financial system, the stakes get even higher. The industry must constantly invest in state-of-the-art security measures, from encryption and multi-factor authentication to continuous monitoring for threats, to stay one step ahead of bad actors. Data privacy is a closely related concern. While using business data to assess risk and offer tailored products is powerful, it also raises important questions about who owns that data and how it's being used. Business owners need to trust that their information is being handled ethically and transparently. Striking the right balance between leveraging data for innovation and protecting the privacy of individuals and businesses is a critical challenge. Clear policies, user consent, and a commitment to privacy by design are essential for maintaining that trust. Finally, there's the issue of regulation. The financial industry is one of the most heavily regulated sectors of the economy for good reason, to protect consumers and ensure the stability of the system. Fintech companies often operate in a regulatory gray area, moving faster than lawmakers can keep up. Regulators are now working to create frameworks that foster innovation while also managing risk. This includes ensuring fair lending practices, preventing predatory behavior, and establishing clear rules of the road for new financial products. The future of fintech will depend on a collaborative relationship between innovators and regulators, working together to build a system that is both dynamic and safe. Despite these challenges, the future of small business finance is undeniably digital, data-driven, and more inclusive than ever before. The changes we're seeing are not just incremental improvements. They represent a fundamental paradigm shift. Fintech is beyond just changing how businesses get paid or apply for a loan at S, changing the very nature of how they operate and grow. It's empowering entrepreneurs with tools and insights that were once unimaginable, allowing them to compete on a more level playing field. As artificial intelligence and machine learning become even more sophisticated, we can expect to see even more personalized financial products, predictive cash flow insights, and automated financial advice tailored specifically for the needs of each unique small business. The journey has just begun. The fusion of finance and technology is unlocking a new era of entrepreneurship, powering the next generation of small businesses, and in doing so, strengthening the backbone of the American economy. Thank you for watching. If you found this video insightful, please give it a thumbs up, and don't forget to subscribe for more content on the future of business and technology. We'd love to hear your thoughts in the comments below. How has fintech impacted your business or your community? Let's continue the conversation.